Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INRBonds. I'm Arjun Patsarthi, and the Sensex and the rupee rally as the Fed chief pushes up risk assets. In the Jackson Hole conference held last week, the Fed chief said interest rates will remain low for extended periods of time, even as they started to talk about tapering of bond purchases. So the markets took this as a sign that policy will not change for a long period of time. As you see the charts, the S&P 500 index has touched record highs. And if you see the US junk bond yield it's at record lows. And this signifies that markets are still very keen on pushing up prices of risk assets. Commodity prices are higher, as well as real estate prices in the US and other parts of the world, clearly showing signs of a risk of an asset price inflation. So India has seen a strong inflow of foreign direct investments, about 22.5 billion in the first quarter of this year. And the way the FX reserves have gone up and signifies that capital flows have been extremely high, signifying that a lot of money is flowing into the Indian markets from cheap global capital. So that's the good part. So what's the bad part? The bad part is clearly that COVID cases are increasing globally. And with the COVID cases increasing globally, despite double vaccinations in many countries of the world, it does lend to a certain bit of trepidation on what could be the future of the global markets as well as economies in case many countries go back into lockdown. And the ugly part of it is the worry that this current rise in asset prices is unsustainable, given that it's fueled by central bank liquidity and low rates. And will it lead to something like what happened in 2008 when a credit bubble burst? Or will it lead to an inflation shooting up across the globe, affecting emerging markets like India? Or will it cause financial markets and economic instability globally and in India? So the central RBI especially has to keep a very strong watch on excessive volatility in markets and excessive rise in asset prices, though they can't do anything about it, but they might just start to look at policies that could actually temper the rise in asset prices if they think that this could lead to a lot of financial market instability. So thank you for listening in. Don't forget to subscribe to our YouTube channel and also to visit INRBonds and subscribe to take a free trial to access all the research, all the bond information, as well as buy the best bonds available in the market at the right price and the right bond for you to invest in. Thank you very much.